Welcome back. If you're tired of watching others build wealth while you're stuck, this is your wake-up call. Today, we're breaking down the 7 financial rules that separate the wealthy from everyone else. No fluff, just actionable principles. These are the lessons school never taught you, but mastering them is the difference between working for money and having money work for you. If you feel like you're running on a financial treadmill, pay close attention. We'll dissect each rule, giving you the exact mindset and strategies the rich use to build and keep their fortunes. Ready to stop being a spectator in your own financial life? Let's get into it. Smash that like and subscribe for more real financial game plans every week. Rule number 1. The rich buy assets, the poor buy liabilities. An asset puts money in your pocket. Think rental properties, dividend stocks, or a business. A liability takes money out, like a financed car, a fancy phone on payments, or an oversized house that drains your cash. Most people mistake liabilities for assets, calling their car or primary residence an investment when it actually costs them. The wealthy focus on buying assets first, then let those assets pay for their luxuries. Got a raise? Don't upgrade your lifestyle. Upgrade your asset column. Every dollar should be a soldier working to make you richer. Ask yourself, will this purchase make me money or cost me money over time? The goal isn't deprivation. It's building enough assets so their income pays for your wants. Want a new car? Buy an asset that covers the payment, then enjoy both. Start today. List your assets and liabilities. Be brutally honest. For most, liabilities outweigh assets. Your mission: grow your asset column, shrink your liabilities. This simple shift is the foundation of wealth. Remember, assets buy freedom, liabilities buy stress. Make every dollar count. The wealthy don't spend to look rich, they spend to get rich. Start building your asset column now. That's the first rule. Let's move on. Rule 2. Stop trading time for money at least. Don't plan on doing it forever. Your time is limited, but money isn't. If your only plan is to work more hours, you've capped your earning potential. The wealthy break free by building systems that generate income whether they're working or not. Passive income isn't magic, it's the result of upfront work that pays off over time. Examples? Digital products, YouTube channels, blogs, or investments like stocks and real estate. When you invest, you're leveraging other people's time and effort to grow your wealth. Real estate? A tenant pays your mortgage and provides cash flow even if you hire a manager. The key? Think like an owner, not just a worker. Build or buy assets that pay you even when you're not working. Start a side hustle you can systematize or invest a portion of every paycheck. Your time is your most valuable resource. Use it to build freedom, not just cover bills. The rich use their time to create assets that buy their time back. What system can you start building today that will pay you tomorrow? Don't just work for money, make money work for you. That's how you escape the rat race. Let's keep going. Rule 3. Invest early, even if it's just a little. Compound interest is the most powerful force in finance, and it needs time to work. Every day you wait to invest is a day you rob from your future self. You don't need thousands to start. Modern apps let you invest with just a few dollars. The excuse of not enough money is gone. Example, start with $200/month at 25, or $500/month at 35. The early start wins, thanks to compounding. Your most valuable asset isn't your income, it's your time horizon. Build the habit. Automate a small transfer into a low-cost index fund every payday. Don't chase hot stocks. Focus on consistent long-term growth. The goal? Get rich slowly by letting time and compounding do the heavy lifting. Open a brokerage account today. Set up a recurring investment. Even if it's just the price of a coffee. The amount matters less than the act of starting. You're planting a tree for your future. The best time to start was years ago. The second best time is now. Don't wait for the perfect moment. Start now and let time work for you. Small, consistent steps beat big, delayed ones. That's the compounding advantage. Let's move to the next rule. Rule 4. Protect your downside. Building wealth isn't just about making money. It's about not losing it. Warren Buffett's top rule: never lose money. Why? Because losses hurt more than gains help. Start with an emergency fund. 3 to 6 months of expenses in a high-yield savings account. This is your financial firewall against job loss, medical bills, or car repairs. Next, insurance. Health, car, home, don't skip them. One disaster can wipe out years of progress. Diversify your investments. Don't bet everything on one stock or sector. A diversified portfolio spreads risk and keeps you in the game when things go wrong. Know your risk tolerance. Don't chase high returns if you'll panic and sell at the first drop. The best strategy is one you can stick with through ups and downs. Think of your finances as a fortress. Emergency fund is the moat, insurance is the wall, diversification is your defense. Focus on defense first, then go on offense. Before chasing big gains, ask, am I protected from disaster? Wealth is built and preserved. Don't gamble with your future, protect it. Let's keep building. Rule 5, always be learning. The world of money is always changing. What worked yesterday might not work tomorrow. The wealthy treat financial education as a lifelong pursuit. Knowledge compounds just like money. The more you learn, the more opportunities you see. Dedicate time each week to financial education. Read, watch, listen, and stay curious. Make educational content part of your routine. Swap some social media time for finance podcasts or books. Read at least one finance or business book a month. Each one adds a new tool to your toolbox. The more you know, the easier it is to spot scams and bad advice. Your knowledge is an asset no one can take from you. It's what lets you rebuild if you ever have to start over. Treat your brain as your most important investment. The time you spend learning about money pays the highest returns. Don't be passive. Be an active student of wealth. Keep learning, keep growing. Next rule. Rule 6. Use leverage the right way. Leverage isn't just debt. It's any tool that multiplies your results. The rich use leverage to buy assets, not liabilities. Example, a mortgage lets you control a rental property with a small down payment, earning income on the whole asset. Leverage also means using other people's time, hiring employees or outsourcing tasks to grow your business. Technology and media are modern leverage. One video or blog post can reach thousands, working for you 24/7. Leverage other people's experience. Read books, take courses, find mentors. The poor think in addition, work more hours. The rich think in multiplication. How can I turn 1 hour into 100 hours of output? But leverage is a double-edged sword. Used wrong, it amplifies losses. Use it responsibly with a margin of safety, and only on assets you understand. Ask, where can you apply leverage in your life? Can you use a smart loan, hire help, or create scalable content? Don't try to do everything yourself. The path to wealth is paved with smart leverage. Work smarter, not just harder. Let's finish strong. Rule 7. Think in decades, not weekends. The wealthy play the long game while most chase instant gratification. They're focused on building for the future. Broke people live for the next paycheck. The rich plan for the next decade. Every financial decision is weighed against long-term goals. When they get a bonus, they see more shares or another rental property, not a new gadget. Long-term thinking means embracing boring but effective strategies, consistent investing, paying down debt, reinvesting profits. Success is the result of small, repeated actions over years. Delayed gratification is the secret, saying no to small pleasures now for bigger rewards later. A long-term mindset makes you a better investor. When markets crash, you see opportunity, not panic. It's about balance, but tilt it toward your future self, especially early on. The sacrifices you make in your 20s and 30s have the biggest impact. Practice decade thinking. Will this decision help me in 10 years? Success isn't sexy, it's consistency and patience. Play the long game when everyone else is playing checkers. That's how real wealth is built. There you have it, the 7 rules of wealth creation. These aren't just tips, they're a complete operating system for your financial life. The difference between where you are and where you want to be is consistent action. Don't just watch, pick one rule and start this week. Maybe it's opening a brokerage account, setting an emergency fund goal, or buying your first finance book. Small, consistent actions build unstoppable momentum. Smash that like and subscribe for more financial strategies. Drop a comment. Which rule are you starting with today? Let's hold each other accountable. Money follows strategy, not luck. See you in the next one.